Hey traders, Richard K from Price Action and Income. And if you guys can remember last week's video, I mentioned that I would like to show you one of my all-time favorite corrective patterns. So in today's video, I'm going to do exactly that and share with you the analysis techniques I use to trade triangle correction, which is by far one of my favorite patterns to trade. And what I'll be showing you in this video will be the techniques that I use to find the end of these corrections, where they are most probably to end. And if you stick until the end of this video, I'm also going to show you another quick analysis technique that I'm sure not many of you guys are familiar with, but nonetheless, it's a great technique to help you enter into a triangle once it's ended, a bit more of a conservative entry if you don't find the exact end of a triangle, but yeah, just a cool piece of information that I would like to share with you guys. All right, so without further ado, I just want to show you an example of an actual trade that I taken back here in July 2019. And this is just an example, guys. I'll be showing you another example on Euro US dollar a little bit later. And this will be a triangle pattern, like I said, that I've actually taken. And if you crunch up your chart quite often, you'll normally spot these patterns because there are different ones. You've got ascending or descending triangles, and you get symmetrical triangles. And this example, I'll be showing you a symmetrical triangle, and one I've been tracking for a few days until it actually ended. It had a nice crisp, clean entry on it, and boom, price was off to the races. Again, this is on the gold spot US dollar. And I've set this to a 4-hour time frame. And let me just open up this chart for you guys and actually show you how I use my techniques to qualify a triangle if I am dealing with a triangle, and how I label and use trend lines to define the actual shape of a triangle. So first off, obviously now I'm showing you this in hindsight. But when you're actually dealing with these triangles in real time, the techniques I'll be showing you next helps in most cases to figure out where that correction should end in with pretty decent accuracy. So the gold was coming up, as most people will know, quite strongly. It came into an high over here, and then we had a correction lower that happened in 3 waves. And you would have been forgiven to think that this was a simple zigzag lower. You would not have known that this is going to become a triangle. It's just impossible to predict. But even if you entered over here and price went up towards almost breaking the high from where this correction started from, if you use proper money management, you wouldn't have taken a loss even if price came down again. And this is how I just want to quickly show you how I label my triangles and the trend lines that I use to define the shape. So firstly, let me just use my labeling tool here in TradingView. You always have 5 waves within a triangle. Just get rid of the magnet mode, T and E. And it's labeled A, B, C, D, and E. Again, 5 legs or 5 waves, whatever you want to call them. Before you always end a triangle in an E wave, and the trend then continues. In this case, trend was up, we got a correction low, so you want to first label your first wave or leg lower as your A, because that's the start of the correction. Then, because price didn't break this high over here, or this previous high over there, sorry, price came down again, created a higher low, and it wouldn't have been around about the middle over here when price went upwards again that you can actually start thinking or planning that you might be dealing with a triangle. So you never really know that you are dealing with a triangle until a later stage of its development, and it's normally here between the C and the D wave that you should start thinking that you might be dealing with a triangle. And as I'll show you now using some tools, when some conditions happened over here, it kind of told me that there's a high probability we're going to get an E wave, and if we are still in an uptrend, that this trend should probably end in an E wave. But then I also use trend lines, simple trend lines. You normally have your correction downwards, and from where you labeled your A wave, you have to draw a line up. In this case, we were dealing with a symmetrical triangle. Again, you would sometimes get ascending triangles or descending triangles depending on the trend direction that you're trading in, and ascending triangles in a bullish market would have a flat top. But in this case, we did not have that. We had what we call a symmetrical triangle. A symmetrical triangle, as time progresses or as the pattern progresses towards the left or to the right, they'll have a contracting range as price and time matures before the correction end and the original trend continues. So you always want to draw your first trend line from the A wave, connect it to a C wave if you think that is a C wave, and then from your B wave, and not actually this high over here, you always draw it from your B wave and you'll draw it to the D wave. You only draw this upper one in this case, in this bullish scenario, when you actually had a condition over here and price came down again. So this is why it's quite important to use additional tools. And when I use my I would say market geometry tools so much on triangles, I primarily use the Fib retracement tool. So of course we might have just done an ABC, but price failed to break out, and once it came down towards the mid of this range, and the C wave happened over here, you could have used a retracement from the A from bottom to the B, and you see price actually overshot this 0.786% Fib retracement. But nonetheless, nothing is ever picture perfect in trading. Price did go up, and at this stage, when price came to about the center of this range from this high to this low, you would have thought, okay, if price fails to break this high over here, then where is it most likely to stop if you are dealing with a symmetrical triangle? And this is a beautiful case where price stopped exactly at a 0.786% Fib retracement. And you'll quite often find that your symmetrical triangles love respecting either the 0.618, which is your golden ratio, or the 0.786% Fib. And at this stage, when this happened, all you had to really do was wait for an E wave and see where that E wave would end. And this is where you would have then taken your Fib retracement again, take it from the C wave to the D wave, because it made a lower high in this case, came down towards the center of this range once again. And what do you do when you're always dealing with a pattern? If you have an initial strong move to the downside, you most often, I would say more than 80% of the time, will have a reaction and another wave down. So whether if you entered here and you had a stop below your C wave, or would have entered down here, it doesn't matter. But there are additional tools that I look at, which I'll show you right now, to have gauged the exact zone or area and time to pinpoint the actual low, where it is most likely to end. And again, guys, this was a real trade, real setup that I've taken with myself and my members. And you'll see that the price came down, respected 0.618% once, formed a lower high, came down again, and it touched the 0.618% on 2 occasions. But this is where it's quite important to start using additional tools. I'll show you in the next chart how that's done. But I would quite often, when dealing with the D wave, also use market geometry. And as you know, I like using my pitchforks, or a combination of my pitchforks and my channels. If you've gone from that high to this low to this lower high over here, you see, and I love using my shift pitchforks when dealing with corrections. You'll see that price failed to actually break through the center median line of this downward sloping pitchfork. You could have used a channel at the same time as well. It would just bring that up, and you could have run that from that high to simply this low, and you'll see that there, where you got 3 occasions of different lines crossing to 0.618%, is where this market reversed from, in this case gold, back to the upside. But to take it one step further, and this is also something I look at quite often, I would say actually most of the time, to qualify that all the conditions are ready for you to take a trade. Because all you had to basically do is exercise some patience. You anticipated the market might come down, and when the market did follow your anticipation, it was time to identify an area where you wanted to enter from. And this was a very, very accurate prediction that I've had, or can we say forecast, basically just created a zone, a pretty wide one, and just said, well, if price would enter this area, interact with some of my median lines, in this case a center median line and the center of a channel line, in conjunction with a fib retracement level measured again from your C to your D wave in this bullish example. And this is where I would normally then grind down into a smaller time frame. And on here you'll see I've got my 30-minute time frame, and this is a great filter to use. As you'll see here down here, I've got my MACD, and I quite like looking at the histogram of the MACD, and what I would like to see is momentum divergence. Once price interacts with a median line in this case, and also where at my central channel line, I've had momentum divergence quite strongly over here. I know some of you guys like watching momentum divergence or trying to spot momentum divergence on the actual signal line of the MACD. That happened as well, but it doesn't really always pick up on the signal line. That's why I like using the histogram. And there was a slight little bit of divergence over here as well between these two lows. But in either case, if you had a decent setup and you know where to put your stop loss properly, then you would have been more than safe in this trade. And you, even if you entered here or here, wouldn't have mattered. You can also have looked at some reversal candlestick patterns. Here we had a hammer pattern followed by a doji, and then we had this huge bullish engulfing candle, which was the signal that you could also enter into this trade. So there's quite a few conditions that you can build into your analysis, and once all these conditions appear at an area that you identified beforehand, then it's time to enter. In this case, we beautifully identified a small area zone, and it was off to races to the upside again. Just before we get to the Euro-US dollar, that I want to show you on a larger triangle that I've been following a while back. I just want to get rid of most of these lines and show you the other tool that I use. I don't show this often. It works quite great as a more conservative entry method, if I can put it that way. And what you basically want to do is, here on TradingView, I am aware that you probably won't have this tool on most other platforms, but if you go to your labeling tools and you go all the way down here on TradingView, you'll find what they call the sine wave. And basically what that does is it creates a sine wave. I won't be going into much what sine waves are, but you'll visually see what I'm after, what I'm trying to explain here. If you take from that high to this low, where the A was, this is another way that you could measure your individual waves. Normally you will find that if you go from that high to this low, once you think you've got a B wave, as soon as price breaks the sine wave, in this case to the downside, you'll quite often see that you all notice that a high is in place. So it gives you a little bit of a confirmation that what happened previously was probably an important high or low. But with sine waves, you can't just leave this on here. I know some people do. In this case, there were some highs and lows actually at the middle or center of these troughs and peaks of these sine waves. But the way I like to do it is, let me just get rid of that one again and draw the sine wave again. So we went from that high to this low. If you go from A to B, in this case, it actually went a little bit further, and you got your C wave that you were waiting for. As soon as price then breaks above the sine wave line here, then you got a good confirmation that your C wave is in. And we've got to continuously step this forward. And now we want to go from a C wave to a D wave. And remember that we had our entry over here, or you were waiting for entry around this level. Just took away all these lines because it's getting a bit cluttered on my chart. But in this case, again, C to D wave, it came into an area that you were looking for. And once price broke, in this case, once again, so we had 1, 2, 3, 4 occasions where price then breaks a sine wave to the upside, that this actual move was over. So this is just a bit more of a, how can I say, it's a bit more of a, just waiting a little bit longer for more extra confirmation before you enter into a trade. But nonetheless, it's a pretty cool tool to use. Like I said, not many people have this tool in their trading packages, but if you do have trading view, it's definitely something that you should have a look at and experiment with to see if there's anything that can help you guys with your own trades if you want to trade triangles. Another quick thing with triangles, and this is an actual more of a conservative technique than using the sine waves. If you waited for this pattern to actually end, in our case, I quite like trading or setting targets from where this correction, or where I think this correction started from, which was in this case. Price reached that and then start coming down again. So I would have been out of this trade already. Depending if you would have had a long-term position, that's a different story. But quite often you'll find that traders will wait for a break of this upper trend line, in this case our symmetrical bullish triangle, and when price pulls back to that, that could be a good entry point as well. And what's quite interesting about this one here too is, although price did not actually, where's it high of this? There we go. Although price did not continue that far higher, it started correcting lower again, and we had almost 1, 2, 3, almost on the fourth, but it was a beautiful fourth touch of the upper channel line again, and price was, in this case, moved up really strongly to the upside. So guys, that's just a quick example of a symmetrical triangle. Like I mentioned, I want to show you the euro US dollar as well. This is an actual pattern I traded myself, not with my members. And this is something I've only started noticing back here at the end of 2016, around about September. And what you'll notice here is, and this is a cool feature that I want to explain to you guys. This is on a daily time frame. We could go to a weekly. I think it'll probably show it much better. But if you go to a weekly time frame, let's just open that chart up. You will, when you're dealing with patterns, especially triangle patterns, and the longer they take to materialize, in this case, all the way from 2015 to about October, when was this? Yeah, September, August, September in 2016, that took more than a year to materialize. And you'll quite often find that when these patterns happen on a longer time frame like this and take so long to materialize, that they often indicate, or should indicate, that that's the end of a probable move. And in this case, this massive move lower, whether this is going to go up again to the sky, who knows, but it normally indicates that you could be expecting the end of a longer term correction if it's on a higher time frame. And this is what happens. Price just popped this low down here and reversed strongly to the upside. I'm with my current trader subscribers actually in a long, or we're going to try to attempt a long position in euro US dollar. You'll probably have seen from one of my previous videos that I was watching a very small zone over here for a possible reversal, which is what we're getting at the moment, which is just another testament of the power of market geometry. And guys, that in short was just a quick explanation of the tools I use, how I label my triangles, which trend lines I use, and some of the tools to define or find the end of these waves, and my case mostly using fib retracement levels, and how these triangles, especially symmetrical ones, like respecting the fib ratios, especially 0.618 and 0.786% fib retracement levels. And that's it for today, guys. I hope you enjoyed today's video. If you did, then don't forget to hit the like button, and please subscribe to this channel for more insightful videos in the future. Until next time, this is Richard K. Goodbye.